Hello everyone, this is Jake Guttman from Rosevest Financial with a Wine Wednesday for January 2022, and today's going to be a little different, and sorry, but a little longer, so maybe pour yourself a glass of wine and pull up a seat. Now, typically this is where I would recap how stocks fared in the last month, as well as the economy as a whole, and I would dive into trending economic, foreseen issues, perhaps opportunities, many different things. But today's going to be a little bit of different style. And, given everything going on around the world, I thought it might be a good time to talk about the current state of the markets and the headlines that are rattling them. So if you watched the news in the last week or so, you know that Russia and Ukraine have been a huge topic of conversation that have led to market volatility throughout international markets. But what does that mean for us as investors? So as always, let's turn to the data and the wine and cover a few key points that are supported by experts. Now, as always, time will tell how these events unfold. But in a rather unexpected outcome, past wars didn't actually push U.S. equities lower in the long term. So studies by LPL Financial Research actually notes that stocks have largely shrugged off past geopolitical conflicts, ushering no evidence to change strategies given that stocks have weathered heightened geopolitical tensions in the past. If we look back as far as World War II in 1939 and up till the end of late 1945, the Dow Jones was actually up a total of 50%, which is more than 7% a year. So during two of the worst wars in modern history, the United States stock market was up a combined 115%, which lends itself to a rather counterintuitive market outcome. The relationship between geopolitical crises and market outcomes isn't as simple as it seems. History tells us that periods of uncertainty like we're seeing now are usually when stocks suffer the most. In 2015, however, researchers at the Swiss Finance Institute looked at U.S. military conflicts after World War II and found that in cases where there is a pre-war phase, like the one we're in now, potentially, an increase in the war likelihood tends to decrease stock prices, which we're seeing, in a way, now. But the ultimate outbreak of a war actually increases stock prices, historically. However, in cases when a war starts as a surprise, the outbreak of a war decreased the stock price. Now, this is what economists would call the war puzzle, and I think it's aptly named. And there's no clear explanation as to why stocks increase significantly once a war breaks out after a prelude, more or less. Now, similarly, Armbruster Capital Management, United States firm, studied a period from 1926 through July of 2013 and actually found that stock market volatility was lower during periods of war. Now, intuitively, one would expect the uncertainty of the geopolitical environment to spill over into the stock market. However, that has not been the case, except during the Gulf War, when volatility was roughly in line with the historical average. So it's important to remember that today's investors have seen the stock market recover from both 9/11, the Great Depression, the Great Financial Crisis, well, for most of us, mainly the Great Financial Crisis, arguably the largest or greatest geopolitical and economic shocks of our time. This makes it easier for us as investors to shrug off other events. A conflict with Russia can cause volatile oil markets, and Russia's a key producer of crude oil and natural gas, with pipelines feeding many parts of Europe. If Russia were to shut off the spigot, per se, and have its oil infrastructure damaged in any way, it could lead to higher energy prices, which we're already experiencing now, but perhaps exacerbated. Interruptions to ports around the Black and Baltic Seas are to be considered, which could create even bigger shipping headaches and lead to inflation with food such as grains and other staples that remain stuck at sea there. But as it said, all of that being said, we continue to monitor your portfolios to ensure that we're ready to act should any opportunity present itself or changes need to be made. My office is here for any questions, comments, and concerns you or your loved ones may have, and know that, as always, we're here to support you and your families. So once again, this is Jake Guttman with Rosevest Financial, signing off with a very Russian economic update for January of 2022. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please call us at 480-951-5300, and we'd be happy to talk to you. Have a fabulous end to your February and a very happy Wine Wednesday.